Have you ever wanted to learn how to margin trade, but found that it all seems very overwhelming with all these signs and symbols and numbers everywhere? If so, today's ultimate Binance tutorial is for you. We're going to go over all the major topics related to margin trading, but we're also going to go over the 3 pro tips which will put you ahead of 99% of all amateur traders, because these are the 3 tips which professionals apply to their trading strategies, at least most of them. And these are the 3 tips which will help you minimize your losses, because of course margin trading does involve much higher risk than spot trading, and also maximize your profits. So stick around until the end of the video to find out what those 3 pro tips are. Welcome to the channel. My name is Frank and this is Altcoin Buzz. As a friendly reminder, please be informed that this is a volatile space and there is a corresponding risk in cryptocurrency. This video is informative in nature, so please do not take it to be official, financial, or investment advice. Also, be sure to check out the link in the description below to see more information about our $600 exclusive Altcoin Buzz offer here. If you sign up with Binance today, you get a whole bunch of unlockables as well as a 20% lifetime trading fee discount. And to top it off, we have an extra trading competition on Binance. So stick around until the end of the video to find out more information about that trading competition. So these are all the topics we'll be covering in the video. Feel free to skip to any of the chapters which interest you the most in the video. These are the topics that we will be covering. So let's start off with funding a margin account. Well, the first thing you want to do is go over here to Binance. I'm assuming that you've already signed up for Binance and that you've deposited some funds onto Binance. So to get to this page, you want to go to Wallet and Margin, and this will give you your wallet overview of your margin, but it is also the dashboard for all the margin related information, which will be useful to you. And then, since you won't yet have any funds, click Transfer. From fiat and spot to cross margin, you can use any of the assets that you have on your account. Simply pick your asset from this drop-down menu, and then you will have some funds on your cross margin account. Now, note that there are 2 types of margin accounts. There's cross 3x and isolated. Currently, I have $100 on the cross 3x account, and the isolated account has only $10. But I will tell you more about what the difference is between cross 3x and isolated later on. Now, margin trading, of course, means borrowing money from the broker. In this case, Binance is the broker. So when you have a trade active or when you're borrowing funds, you will see the total debt here. In other words, that's the amount of money that you owe back to Binance. And your account equity is equal to your balance minus the debt, okay? That basically means all the money that you have after you've paid back your debt. And then, of course, the P&L will give you the profit and loss for today or the past 7 days or of all time. So that can be quite useful. And you can even toggle it between Bitcoin and Tether to see how much profit you've made in both of those assets. Now, another interesting thing you can do on this page is to go to Borrow Repay on Bitcoin here. And here you will see the hourly interest rate. So currently it's 0.000033750, but this number is different for different assets. So that's what it is for Bitcoin. Let's go to a smaller cap coin like EOS. And here you will see that actually it's significantly larger. So note that you will usually pay larger interest rates when you're trading altcoins, especially lower cap altcoins compared to the higher cap altcoins or Bitcoin. Okay, so next we will go over 3x cross margin versus 10x isolated margin. So to access that, go to Trade above here and then click Margin in the drop-down menu. Now, as mentioned, I already transferred money into here. You can also transfer money into here over here using this option. You don't actually have to go to your dashboard to do it, which is quite handy. I currently put $100 into the account, and as you can see, we're currently in normal mode. So it says cross 3x, but we're in normal. So what does this mean? This means that I can use almost $100. That's basically what I have in the account to buy Bitcoin. But if you want to actually borrow money, then you click borrow over here. And now you will note that the maximum is almost $300. Why? Because we have 3x the account balance available to us. In other words, we can borrow an extra $200 to enter this trade. And then we have a $300 trade, a $300 position instead of a $100 position. And let's say that we enter at this level and then the price goes up to 21,000 and we decide that we want to sell. Well, in that case, we put in our $300 that we want to sell and we click repay over here. And this means that it will repay our debt, all right? It's important to repay your debts because otherwise, of course, you will be paying interest on the money that you borrow. Now, the main difference between cross and isolated is that on cross margin, you risk all the funds in your margin account, okay? So if you have multiple positions open on your account, you can get your whole margin account wiped out. And that is why I personally prefer to use isolated, because it gives me more control over the positions that I'm in by limiting the risk to other positions. And if I do get liquidated, then I only get liquidated for one position as opposed to multiple positions at the same time. And more information about that is found here on the Binance blog, on the official Binance blog. So in isolated margin mode, the margin is independent in each trading pair, okay? So you have an independent isolated margin account. As in other words, it's not dependent on other positions. It has got nothing to do with other positions. It means that even if you have enough assets in other isolated margins account or in the cross margin account, the margin will not be added automatically and you may have to replenish manually. But as I mentioned before, once you get if you get liquidated, it will not affect other isolated margins. So you don't risk losing the other positions that you had open. Now, in cross margin mode, assets in a cross margin account are shared by all positions. And once liquidation happens, all positions will be liquidated. So note that this is the most important distinction between margin and cross, that margin uses all the positions as collateral, whereas isolated margin uses only what's in that isolated margin account for that trading pair. Okay, so let's enter an example trade to show you what it looks like. Currently, we are in cross 3x. So if you click on any of these Bitcoin prices here, you will see that it shows automatically here for you, which is a quick pro tip there. Okay, let's enter an example trade here to show you what this looks like. So here we're going to enter a short as a demonstration. So you can see that if I'm in the normal mode, I actually can't short anything. Why? Because when you short, you by definition are borrowing assets to be able to sell them later. So to short, you have to click borrow. And when I click this, you will see that the maximum is now an actual number, which is not 0. So I am able to short. So let's just say I want to use 10% of my account here to short Bitcoin. That will be a total of $20. So I could wait patiently for the price to reach this level, but for efficiency's sake, I will create a market order. Again, I'm using 10% of the account balance. We can see here that this means I will be shorting 0.001 Bitcoin. So I'll go ahead and click margin sell Bitcoin over here. And here, of course, they remind us that the loans bear interest once the order is successfully placed, filled or not. This means that if you create a limit order and it is not filled, you will be paying interest on that limit order. So something very important to note. Of course, with a market position, it doesn't matter because the order will be placed immediately. So I'll go ahead and confirm that. And now you'll see that there is this notification from Binance telling us about our account's risk from the margin level and all of these things. So if you don't have a stop loss in place, then all of this will be very important. But I personally always have a stop loss in place, so I don't risk getting liquidated. And then here, of course, they're letting us know all the information about open orders, order history, and trade history. These are all found down here. So I'll explain these to you right now. So currently we have the order history, which shows us that we market sold Bitcoin at $20,031 for 0.001 Bitcoin, which was the equivalent of about $20 worth of Bitcoin, and that the position was filled. And then if we go over to our positions tab over here, you can see that we have this Bitcoin minus 0.001. And this is, of course, a debt that we have. So we could potentially repay this. But of course, if we repay this, then we will be taken out of the trade. And this figure above here, this is 100 plus $20. In other words, the $100 that we had on the account plus the $20 that we borrowed to short Bitcoin. Okay, next we will look at trade history. So trade history shows us the trade that we entered here, this short. it's actually almost identical to what you see in order history. But the order history means that you've placed an order and you have not necessarily entered this trade, but trade history shows you the trades that you have already entered. And then finally, funds shows you how many funds you have on your cross account. And now coming back to our margin trading dashboard, we can see that our total debt is $20. Remember, we shorted Bitcoin for $20 worth. Our total balance has now gone up by $20, but that's not because we transferred more money to the account. That's because we shorted $20 worth of Bitcoin. So of course, our account equity is still the $100 that we put into the account at the beginning. And the risk is currently low risk, but of course, if we get to a level of 1.3, then you will see that it will send us a liquidation warning notification. So that's obviously not something that we want. And that is why we are going to, of course, enter a stop loss. So for that, we will go ahead to the buy section here. And let's just say that if the price goes above $2,200, then we want to close the position. Well, in that case, we go to a stop limit order, click on that, and the stop will be the price of 20,200. And the limit will just be a price well above that to ensure that our trade gets filled. So what this means is that we will have our trade be filled anywhere between 20,200 and 20,400. But of course, it's going to be much closer to 20,200. And then the amount will be 0.001 Bitcoin, because that is how much we shorted. And then we will click repay, right? Because we want to repay our debt when we are closing this trade. And now I'll go ahead and click that. And again, it'll give us this order confirmation. Everything looks fine over here. Confirm. And now you can see that we have an open order to buy 0.001 Bitcoin if the price goes over 20,200 up to a maximum price of $20,400. So the next topic is borrow and repay. So what does this mean? As we already talked about in the example, if you want to borrow money to enter a position which is larger than the amount that you have on the account, then you can borrow money. And when you close that position, in other words, if we enter a long here, we want to close that position, then we repay when we sell over here, and then it will cancel out our debt. And of course, don't forget, you can always see how big your debt is on the margin dashboard over here. Okay, next is the margin trading calculator. So this is useful if you want to make calculations about your potential profit and loss. So for the sake of this example, let's assume that we're entering at a price of $20,000 and we're exiting at a price of $22,000. And let's say we have an original amount. In other words, what we have on the account is $100, but we are borrowing $900, and we are using cross margin by, calculate. Here you can see that we will have a profit of $100 and a return on investment of plus 100%. So what does this mean? This means that although you only had $100 on the account, your return on investment was plus 100% because you borrowed $900. So this is the P&L, so you can calculate the potential profit that you will make given how much you're borrowing. Now, when it comes to target price, here you can see what your target price is if you know what percentage profit that you want. So let's say you want to have at least 3% profit on this trade. And again, let's say you have $100 on the account and you're borrowing $900. Then if you click calculate here, it will calculate a price of $20,091. So you will notice that $20,091 is not even close to 3% above our entry price. And why is that? That's because we're borrowing the majority of the funds for this trade, all right? If you borrow just $1 and calculate, then you will see that the 3% is more or less accurate. $20,031 plus 3% is approximately $20,626. But if you borrow $900, then you only need to reach this price to generate 3% return on investment. And then finally, if you go ahead to liquidation price here, you can calculate at what price you will be liquidated given how much you're borrowing. So let's assume that we want to short one Bitcoin and we have $20,000 on the account. So if we calculate that, you can see that the liquidation price is extremely small. Bitcoin would have to reach $64.37 for our position to be liquidated. Why is this? It's because we have almost the exact amount as collateral on the account. But of course, most of the time you'll have a much smaller amount as collateral. So let's say we have $2,500 on the account instead of $100. Here you can see the borrow amount is $17,500. If you click calculate, you will see that here we will be liquidated if the price falls below 19,314, so much closer to the original price. So we can margin buy at this price, but if we get to this level, the whole position will be liquidated. That being said, you really want to aim to never ever get liquidated, because when you get liquidated, you pay an extra fee for being liquidated. And of course, it's not comfortable being liquidated. So it's really much better to always have a stop loss in place. Okay, so we covered the margin trading calculator. And finally, I will go over using the technical indicators. So technical indicators, for that, go over to the trading view option over here. Before we were in the original, trading view is the more advanced, more professional chart viewing platform. And here, go over to technical indicator. And here you can enter any technical indicator you want. You have a very wide range. If I'm not mistaken, the same range of indicators that you had on tradingview.com, apart from maybe some of the pro features on tradingview.com. But basically you have everything that you could want here. And also I find this very handy that here you can see open, or if you click open orders here you will see the open order is 0.001 Bitcoin. In other words, that is my stop loss, which we entered before, and you can see at which price that will get triggered. So you can see that currently the price is at 20,087, and if we reach that level, this order will get activated. And you can also cancel this order by pressing the X over here. Then we have order history. This is probably less interesting, but this will tell you the history of orders which you have over the past 6 months. And then over here you can use different types of candles. I personally like the classic candles, but some people like to use Heikin-Ashi, the Japanese style candles. And then of course you can take a snapshot. This will just take a picture of your trading account. And finally on this row you can also compare Bitcoin to, for example, ETHUSDT, and then you will see a comparison of these two charts. And of course here you need to edit it if you want to get the right color. This is the purple one, represents the ETHUSDT. So you can go to style here, and maybe you want it to be a step line instead of a normal line, but basically you can compare Bitcoin to Ethereum using this compare feature. So I'm just going to get rid of that by going over here and clicking the X. And then of course on this trading view you can also check out different time frames, like the 15-minute, 1 hour, 4 hour, 1 day and 1 week time frame. And you can even select much smaller time frames and higher time frames by clicking this drop down menu over here. Okay, now finally the 3 pro tips. So these 3 pro tips are: number 1, have a stop loss. Okay, I can't emphasize this enough. People are always talking about getting liquidated and why margin trading is risky because you can get liquidated. I think it's ridiculous, because if you have a stop loss in place, you will never get liquidated. You only get liquidated if you don't have a plan, if you don't have a stop loss in place for every trade. That is why when we entered this trade, we had a stop loss immediately after. So I can go about my day and I never have to worry about this trade getting liquidated. Okay, that's number 1. Number 2 is to create and fill out a trading document. Okay, so a basic, just a very basic trading document could look like this, where you have the trade number, your trading pair, how much you're risking on each trade, your reasons for entering the trade. This is very important because you want to have several reasons for entering every trade. You can enter your targets here for that trade. I just entered a trade recently here on Ethereum where I have several targets. And then you can have your total bankroll here, and you can calculate that 2% of that bankroll is $30. And why is this very important? I'll tell you in just a second why this 2% is very important. But finally, yeah, you can calculate your profit and loss for each trade and thoughts or lessons learned. This is what the professionals do, all right? If you want to learn to trade like a professional, you have to put in the work. You have to understand why you're entering a trade. You have to understand why a trade didn't work out, and you have to learn from your mistakes. Now, finally, the 3rd pro tip is never risk more than 2% of your trading bankroll. Now, I can't emphasize this enough. I used to be a professional poker player, And this exact same principle applied. Never risk more than a very, very small percentage of your entire roll on every trade that you make, because that is exactly the way that you get discouraged and demotivated and disillusioned by trading, is by losing more than you're comfortable losing and not having a plan for how much you're willing to lose on each trade. Again, that brings us back to the stop loss. Know how much you're going to lose on that trade and be very disciplined about ensuring that you have a stop loss in place every time. All right, that's been it from me for today. I hope you learned something. I hope you will remember these 3 pro tips, because really I do believe that you will be ahead of 99% of amateur traders if you apply these 3 pro tips. And don't forget that we have an exclusive offer with Binance up to $600 to be won. And we also have a trading competition, a new trading competition, which makes this deal even sweeter. We have up to $1,000 which can be earned on that trading competition. And it's valid for all people who trade between the 14th and 18th of September. All of you will be eligible for winning some of this $1,000. So feel free to check out our link down in the description below for more information about that. And if you enjoyed this video, feel free to subscribe to our channel or check out other videos on our channel from Matt and Natalie. We post about crypto news, technical analysis, on-chain analysis, and more. So feel free to check out those videos. And with that being said, I'll see you in the next one.